I'm Redbord, and this is TRM Talks. I am Global Head of Policy at TRM Labs. At TRM, we provide blockchain intelligence software to support law enforcement investigations and to help financial institutions and cryptocurrency businesses mitigate financial crime risk within the emerging digital asset economy. Prior to joining TRM, I spent 15 years in the US federal government, first as a prosecutor at the Department of Justice, and then as a Treasury Department official, where I worked to safeguard the financial system against terrorist financiers, weapons of mass destruction proliferators, drug kingpins, and other rogue actors. On TRM Talks, I sit down with business leaders, policymakers, investigators, and friends from across the crypto ecosystem who are working to build a safer financial system. Today, we'll be talking to Circle's Caroline Hill. But first, inside the lab, where I share data-driven insights from our blockchain intelligence team. In today's Inside the Lab, we're diving into the key findings from TRM's latest report on crypto crime trends in 2024. The headline, illicit crypto activity has dropped significantly. In 2024, overall crypto transaction volume surged to an astounding $10.6 trillion, up 56% from 2023, while illicit activity fell by 24% to about $45 billion. This marks a 51% decline in the proportion of illicit activity, now accounting for just 0.4% of all transactions. That's worth mentioning. So in other words, according to TRM's crypto crime report, only 0.4% of all transactions within the crypto ecosystem are illicit, meaning well over 99% of transactions are lawful. Tron remained the blockchain most frequently exploited, responsible for 58% of illicit activity, followed by Ethereum at 24% and Bitcoin at 12%. However, Tron also saw the largest decline, with illicit volume dropping by $6 billion, and the proportion of such activity nearly halving. In other words, illicit activity on Tron dropped by about 50% this year. Sanctioned entities and block-listed funds drove 62% of all illicit volume, underscoring the effectiveness of targeted enforcement actions. It's also important to mention this year in the context of Tron that Tron, Tether, and TRM Labs formed T3, the Financial Crime Unit. That unit facilitated the seizure of about $130 million this year, helping to stem some of the illicit activity on the Tron blockchain. Despite these gains, some challenges persist. Fraud-related crypto inflows dropped 40%, but still hit $10.7 billion, though fraud is notoriously underreported. Ransomware attacks reached new highs, with 5,635 incidents in 2024, while $2.2 billion was stolen in crypto-related hacks, a 17% year-over-year increase. So what does all this mean? First, it means you should give this report a read. It's on our website. While bad actors are adapting, enforcement actions, blockchain analytics, and sanctions are making significant headway in reducing crypto crime. The key takeaway is that as crypto adoption grows, so does the ability to disrupt illicit activity with the right tools and partnerships. Now, let's sit down with Circle's Caroline Hill. Caroline, thank you for coming on TRM Talks.
Thanks for having me.
Folks may remember we did this really fun one, and we were reminiscing about this a moment ago in this really beautiful conference room around a Circle event with big DC law firm, but really, really cool event. I distinctly remember doing this really cool conversation with you, and the backdrop was this gorgeous view of the US Capitol.
It couldn't have been more perfect how we planned it. We were talking about Congress while looking at the Capitol. If people had seen it, they would have thought it was green screened, but it was actually a real backdrop.
It was awesome. And it was a great conversation. I think what people I was joking about, now we have these wonderful producers and this show is a thing on Spotify. It was I set up my iPhone. I tried to get it to stand awkwardly on the table. And I was like, all right, don't move, but let's go. So it's fun to be able to do the real thing with you and really have a much longer in-depth conversation. We spent some time together at Treasury, had a great time there. I feel so lucky. You're one of these people that I pinch myself that I get to work in a space with people like you today, thoughtful former public servants who are now really working to build a safer financial system. I define the ultimate TRM Talks guest. You are essentially that, Caroline. Tell me about your journey. How did you get to this point where you're really deep in this space now?
Absolutely. I spent a majority of my career at the Treasury Department before I joined Circle. Before that, had a short time at the State Department and doing some consulting work as well. But I was really drawn to the work that Treasury was doing at the time. I joined in 2014, and it was the middle of the negotiations around the Iran nuclear deal. And I remember being so drawn to a tool of our foreign policy that really got both sides of the negotiating table. The sanctions that we had imposed upon Iran brought them to the table, and we had very meaningful conversations that obviously led to the Iran nuclear deal. And no matter what you think about the Iran nuclear deal, it was sanctions that were the primary thing that got both sides of the table and then were part of the incentives to keep Iran in the deal at the time. My time at Treasury spanned a number of topics. I worked Iran, Syria, North Korea, and then I even worked Latin America and Africa. And we're seeing sanctions continue to play such a strong role in foreign policy and Venezuela negotiations and in what's happening in Russia and Ukraine. And I feel lucky that I got to be a part of so many of those conversations during my own career at Treasury. From Treasury, of course, I came to Circle, where I am now. And I can talk a little bit more about what led me to Circle. But really, I was drawn to the potential that stablecoins and digital assets and Web3, as we call it, could bring to the financial system and overcome a lot of the challenges that the countries that I was working with and covering at Treasury were grappling with.
That's amazing. Look, you were someone I really deeply admired at Treasury for the work you were doing. It's interesting. I was only there for about 2 years of that, towards the end there, where I always associated you with that human rights portfolio, really kind of thinking through those issues, which is interesting for me to see now what you're doing at Circle around financial inclusion and some of these things. It's almost like the stick and the carrot kind of deal. But like, talk to me a little bit more like specifically about what your focus was at Treasury and maybe dig into any interesting stories.
Absolutely. My last job before I joined Circle, I was covering Latin America and Africa. And what we were trying to do is both a little bit of the carrot and stick, as you said it, is help other countries improve their own capability to counter illicit activity through their financial systems. So when other countries were receptive, we would offer advice, technical assistance, personnel to up level their own domestic systems. So the supervisory functions or the regulators in other countries, how are they countering illicit finance? What laws and regulations did they have in the books? And did those meet kind of international standards that were set by the FATF? That was a little bit of the carrot work. Some of the stick work was when countries didn't want to improve how they were countering illicit finance, or perhaps had such drastic issues themselves. We would work internally at the Treasury Department with our colleagues at OFAC to find ways to incentivize them to want to improve those things, but largely through sanctions. So the most, obvious example here was Venezuela, which had rampant corruption, a dictatorship in play, stealing resources from the local people. We put, incredible sanctions on Venezuela to try to incentivize the government to return to democracy and take care of the corrupt actors that they had at home. We also worked the Human Rights Authority that you were mentioning. We also worked to counter corrupt actors around the world that were, either violating human rights or, were engaging in corrupt acts, and holding them accountable through sanctions. And so really what that means when we levy sanctions, when the United States levies sanctions on normally on an individual or another company, is that they're not allowed to use the US financial system anymore. That's the technical result of US sanctions, is they are cut out from the US financial system. But a lot of countries and companies and individuals follow US sanctions, even if they're not located in the United States. So it also has these second order effects where it becomes difficult for them to do business anywhere in the world. And it really highlights the activity as well. So we would levy sanctions and individuals would have to divest from their companies because they were sanctioned and that made the company radioactive. Or it would draw such a negative light on specific countries and the corruptions within that country that would then incentivize countries to do something about the corruption or about the human rights abuses there. But even the sticks were an attempt to try to incentivize cleaner activity. We had the carrots where we would help countries who wanted to be helped, but then we'd also have the sticks to try to incentivize them that way to have a robust regulatory environment that wouldn't allow illicit actors to do illicit things through their financial system.
Look, backing up a second, the US Treasury is like made up a bunch of different offices. You have domestic finance, you have international affairs, and you have the Office of Terrorism and Financial Intelligence, which basically oversees sort of the national security apparatus. So within that office is OFAC, which is the sanctions regulator you mentioned, FinCEN, which is the Financial Intelligence Unit, the anti-money laundering regulator. There's OIA, which is the tiniest little piece of the US intelligence apparatus. And then you have TFFC, which is the policy shop. And that's where you were. So when you were thinking a lot of these issues, it was like, hey, how do we create policy by leveraging tools, carrots, sticks? And a big part of that was the US engagement with the FATF, the Financial Action Task Force, which is like the UN of anti-money laundering.
Yeah, I think maybe 10 or even 15 years ago now, someone called the FATF the most powerful organization you've never heard of. But if you are interested enough in listening to TRM talks, you'll probably have heard of the FATF.
Yeah.
But I think it's really important to clarify what the FATF is not. People think that the FATF is a supranational regulator or something that makes the rules. FATF makes the international standards for how to counter illicit finance through the financial system. And what they do is they publish the FATFs and then the standards and then the interpretive guidance to those standards that say, here's the best way to counter illicit finance. And then it's up to countries to actually understand those, internalize them, and pass their own laws and regulations to follow them. And the FATF doesn't have any power over countries to do that, but the power that it has is this kind of brilliant ways it evaluates every country. Are you following our standards? And at the end of that evaluation, the FATF puts out an incredibly detailed report. It's actually done by individuals from other countries, other FATF members. So it's not the FATF putting out a report, but it's really like a report by your peers saying, here's how the United States does against all of our standards. And it goes through the standards one by one and says, are they compliant? Are they largely compliant? There's a whole scale of responses. And here's the details on why we're giving them that rating. And it's an incredibly powerful tool to have a 200-page report card of how a country is doing. Not only, how are they regulating? How are they supervising? How is law enforcement working? How is the judiciary and the judicial system working with all these other bodies? It's a whole of government review. And people take notice when the FATF gives poor report cards of countries. And a lot of, financial institutions and private sector companies make business decisions as a result of these FATF standards. Now, with the advent of crypto, the FATF was one of the first bodies anywhere, including governments, to make the standards for how countries should regulate virtual assets and virtual asset service providers, the crypto industry, for money laundering and terrorist financing standards. And so I think too often the narrative is crypto is the wild, wild west and there's no laws and regulations. Well, in fact, the FATF was very early, and the United States was really involved in pushing the FATF to clarify, here's what the standards are. Actually, at that point, the United States had already put out guidance and already incorporated crypto into our regulatory regime. But the FATF was very clear what countries should do and how crypto should be incorporated in regulations. Since the FATF has put out that guidance, it's now up to countries to incorporate that and regulate accordingly. What I also love about the FATF is that it's a living, breathing group. And so not only do they put out the standards, but they update those standards periodically. They put out reports, guidance, research papers around, what the latest trends look like, how are countries doing in compliance with the standards. They try to provide as much guidance as possible to help countries comply as well as private industry comply with their standards as well.
That's a really, really helpful explanation. And to put a point on it, the US and Japan for years now have been the co-chairs of the Virtual Asset Contact Group, which is sort of the crypto wing group within the Financial Action Task Force. So you did this crazy thing. And I want to say it was like 3 years ago where you left this like super stable, really interesting, impactful job at the US Treasury Department and you joined the crypto industry. Tell me about that. And why would anyone do such a thing?
Well, To your point, it was a super stable, very impactful job, but I came to Circle, which I also think is a super stable, very impactful job. So I do have that. But I was alluding to this earlier, my last job covering Africa and Latin America, a lot of the countries coming to the United States for help was around cryptocurrency. And they would say, what are the laws that we should have? What are the regulations that we should have? How has the United States done it? But they also were in the same conversation bringing up central bank digital currencies, CBDCs, and saying, we hear about crypto, we hear about CBDCs, how should we look at these two things? And at the same time, a lot of those countries were coming to the United States and saying, we have been de-risked wholesale by US or Western financial institutions, and we don't have correspondent banking relationships, and we don't have access to New York banks. Is crypto something that can help here? Is CBDC something that can help here? How do we get access to US correspondent banking relationships, which are incredibly important to get access to the dollar? And sometimes those countries would be de-risked because they were too risky. But other times countries and geographies were being risked because they simply weren't profitable enough for US correspondent banks to have those relationships. And that's where I saw the promise and I was excited around what crypto could do in those types of situations. We take for granted here in the United States how powerful the dollar is. And we take for granted, I think, about how well our financial system works. I would say it works for many in the United States, but not all. And it works, but I think even domestically could work better. But when you take a step back and you look globally, cross-border payments are incredibly slow, incredibly costly, and countries need and want access to dollars to help them with foreign direct investment, with trade, with all of these things. And without those correspondent banking relationships that give you access to the dollar, they're really hindered and cut off, and their economic growth suffers. So I was really excited about the prospect of stablecoins. And of course, stablecoins are largely dollar denominated today, but how stablecoins could help some of these problems that have been around for decades, that we spend an extraordinary amount of time thinking about at the Treasury Department, how to counter de-risking, how to improve cross-border payments. And here's this new technology that is, probably not going to solve every problem every time, but could solve a lot of those problems a lot of the time.
Let's dig into those because I actually think that they're so powerful for so many reasons. Why stablecoins? Why today? Why in this environment?
I think stablecoins are so interesting because they are truly in every different part of the Web3 crypto ecosystem. Philosophically, that's, a really interesting place to be. But as you think about the use cases, it's the same thing. It's stablecoins are such a part of all these different types of use cases. I think traditionally people have thought about stablecoins as the base layer of the crypto capital markets. And that certainly remains true today. And stablecoins are widely used in DeFi as well. But what we're really seeing now, which I find truly exciting, is the use in cross-border payments and remittances in humanitarian aid channels that are demonstrating, I think, what people have said for a long time is that it's fast and it's cheap and it's easy. Stablecoins settle, within seconds, many times a lot faster, sometimes a little bit slower, and they can settle for fractions on a penny, sometimes a little bit more, but with the advent of layer twos and rollups, we're seeing that even less and less. And, rather than waiting days, if not weeks, for remittance payments home, people can literally see on the blockchain their payments and their payments settle. We've also seen some pretty institutional players be really excited about this. USDC is now a settlement mechanism for MasterCard. You can settle with USDC in MasterCard's treasury. Visa's integrating with USDC as well. Stripe has announced crypto support and stablecoin and USDC support. So you not only see the crypto nativist take advantage of stable coins, but you're seeing traditional actors as well as actors who are using it for getting money home, or I'm traveling and I want to avoid FX fees, so I can use MoneyGram and pull out USDC from MoneyGram. Or, an integration we're incredibly proud of is with the United Nations High Commissioner for Refugees, UNHCR. Instead of dispersing cash to Ukrainian refugees who are displaced, in Ukraine or all over Europe, they're able to send USDC to their digital wallet, and then they can go to any MoneyGram location at the time of their choosing and pull out local currency. And so all of these different use cases are happening and we're seeing that now. And so I don't think it's no longer just a tool to use in crypto capital markets, but it's really becoming more ubiquitous.
I love that, and it's cool. Like, I think if we even had this conversation a year or 18 months ago, it's, like, slightly different. It's still like, "Hey, we're building this." But now we're seeing it's not just the remittances, humanitarian aid use case, but it's payments, like first world payments. As a lot of us do, I follow Jeremy Allaire, your CEO, on Twitter, and one of the things he's so disciplined, right? I'm post about, I don't know, chicken fingers and baseball and all kinds of nonsense. He is only like, "Hey, what are the apps that are, like, now facilitating USDC payments," right?
Yeah, and those chicken fingers in baseball games, you can pay for those in USDC as well. So that's important. It shouldn't matter what you want to pay for. Jeremy has a fantastic saying that I'll borrow, but of course give him credit for, which is that sending money should be no more difficult than sending an email. And we're not prohibited. I can email you from my Gmail to, your Hotmail or AOL. And same thing, we should be able to send money across borders instantly without thinking, well, you have Venmo and I'm overseas and I can't have Venmo. Even here, you have Venmo and I have Zelle, so we can't send each other money.
It was so awesome. Like, we were having dinner in Zurich, and he was telling me about this new app that was a wallet provider that took the friction out of the transaction. And he sent me USDC. I was like, wow, this is the best dinner ever. I'm like making money at this dinner. But it is amazing what's being built out there and what entrepreneurs are doing. And it feels a lot like USDC is the fuel, which honestly you have to be super proud of. As part of that conversation, you were mentioning legislation or potential legislation. The world has really provided pretty clear frameworks today for stablecoins. You have Mika, and you have activity in Dubai, in Singapore, the MAS. There's a lot of the UK has done a lot. In the US, there's essentially a bill that has been voted out of one committee, which was really exciting for the crypto industry. We were spiking the ball at our own 20-yard line like crazy. But the reality is there's still a long way to go through the House, into the Senate, and to the president. But why is Circle excited about this bill, and like, why is it important that it moves?
It's incredibly important that we here in the United States have a federal framework over how US dollar issued stablecoins should be regulated. Right now in the United States, Circle is regulated just like PayPal or Venmo, and we go state by state and get money transmission licenses in every state where we're required to get one. But there's no federal registration and licensing. Is that being regulated by the Federal Reserve, by the OCC? What does that federal framework look like? And that has stopped, I think, more of the mainstream adoption of stable coins here in the United States until that federal framework is laid out. We've had very bipartisan purple collaboration on the Hill working on this issue. It's been really fantastic to see that it's not just a Republican or it's not just a Democrat issue. And this was really launched, several years back by the White House and Treasury had a president's working group, they called it, on how stablecoins should be licensed and should be regulated here in the United States. And the White House and Treasury are very clear that Congress should legislate this. This is really something that falls within their responsibilities. And since then, House Financial Services and Senate Banking have been incredibly active on the committee. What legislation is attempting to do, and what I think we'll see here when finally passed, is preserve the state pathway that I was mentioning, the state money transmission licenses, preserve that pathway so that if you want to issue a stable coin here in the United States, you can go be licensed through the states, but also have a federal pathway on top of that. And so you don't have to go state by state, but you can kind of go directly to the federal government. That's obviously such a unique part of the United States and how we're regulated. We don't see that in other countries, but that's where negotiations and disagreements I think have lied, is what's the role for the states versus what's the role for the federal government. But even in recent weeks, we've had really positive indications from Chairman McHenry of House Financial Services, from the ranking member Maxine Waters, from Leader Schumer on the Senate side. All have made comments around how they'd like to see legislation pass. Seeing three leaders in the House and the Senate all publicly commit and express interest in getting legislation moving and towards the finish line is really exciting.
That's great perspective. I think that this has been going on for a long time. I think we've been saying for years now that when crypto legislation gets passed, it will likely be stablecoins. And we thought we were there, and it just kind of keeps getting kicked. But it does seem like there's general agreement there and general agreement with industry on what needs to happen. So you remain hopeful, it sounds like.
I remain hopeful. Stablecoins is such a narrow issue of the broader question about how do you regulate crypto. We've seen the EU take a very expansive approach with MiCA, and they actually decided to really address the entire market with MiCA. In the United States, we have taken a smaller bite on just looking at stablecoins before looking at the broader crypto regulation. But I think that's frankly, it's because stablecoins are most similar to what we know in traditional finance. It's the narrow bake pathway, it's the narrow bake model that, somewhat exists. And so, our Congress has said essentially like we're going to look at stablecoins first and then do the broader markets bill.
That dinner that I referenced with Jeremy Allaire was literally, I think, the day after that he announced that Circle was the first MiCA compliant stablecoin issuer, and MiCA had just come into effect literally 24 hours before that announcement. Why do you see compliance as a business advantage, or even just like, why is it the right thing to do?
Jeremy has long said, and love this anecdote as well, that he decided to start Circle after FinCEN issued their very first guidance on convertible virtual currencies, CVC, because it showed the lanes of the road and showed what he could and couldn't do legally. And whether or not you agree with everything or most or some of what's in regulation in the EU or Singapore or APAC, of the regulation out there, whether or not you agree with it or don't agree with it, it provides the lanes of the road and it lets people know this is what you have to do to be compliant. That's what we're hoping here in the United States. I think that will, once we have that here in the United States, we'll see a lot more traditional players want to experiment, partner with, use stablecoins. And that's why we worked incredibly hard behind the scenes to be MiCA compliant as soon as we could be and to be the first global stablecoin, with USDC and also EURC, our euro denominated peg stablecoin, to be compliant with MiCA. But it provides the lanes of the road and it lets everyone have an even playing field. And that's so incredibly important if we're going to get really widespread adoption and be able to, have my mom be using crypto one day.
Yeah, no, exactly. All right, I'm gonna take a hard pivot from like licensing, regulation, policy, legislator, and we're gonna talk about our jam. We're gonna talk about financial crime because this is TRM Talks. You're Caroline Hill. This is where we're going with this. So on the sort of financial crime piece, obviously you are part of what I would think of like as a broader team from policy and compliance, financial crime at Circle that's really, really thinking about these issues day in and day out. How do we keep illicit actors off of our platform? But then also just like, honestly, like TRM, it's like, how do we just work together to build a safer financial system? How do you think about those issues today at Circle when you're thinking about understanding your ecosystem, keeping bad actors off your platform, like all that good stuff?
Compliance is incredibly important to us here at Circle as we understand that we don't want illicit activity in the crypto ecosystem. We're really trying to build the financial system of tomorrow, and we want that available to as many people as possible who want to use these tokens and crypto and systems licitly, not illicitly. And so we've always, invested both time and resources, human resources and other resources in having a robust compliance program and partnering, with providers like TRM to use the power and the transparency that blockchains can afford to address those illicit finance risks as they emerge. And as we see them, the crypto industry, I think, has been vulnerable to hacks and scams and frauds and widespread theft in those hacks. And I think it's everyone's responsibility to work together to make sure that you have the proper AML tools, you're doing KYC, you're monitoring using blockchain analytics and using the transparency that's out there, because we all play a part in keeping the ecosystem safe. I also then think, as will come as no surprise given my background, it's also up to governments to make sure that they're regulating and supervising and being very clear what the rules of the road are for virtual asset service providers or crypto asset service providers operating in the country are.
That's really helpful. And it's interesting. Like, you and I testified before the House Financial Services Committee. And I think a lot of the questioning was around what are the sort of risks within the overall ecosystem. And even if you do a great job at Circle, I had a MAS regulator on a couple of years ago, and she said something like, look, we're only as strong as our weakest link. And a lot of the questions got to, hey, where are the gaps? And then like sort of what are the kinds of things that we can do them? How do you think about, look, you can only do so much. What are the sort of real gaps or risks out there, and how should we think about mitigating them?
I think that's true. We are only as strong as our weakest link. That's not unique to crypto. That's traditional finance as well. And I think that crypto does have that transparency that you don't have in traditional finance, which no one knows better than you, Ari, allows law enforcement and actors in the system to really see things beyond their own perimeter. I think at the core, the United States has had guidelines and regulations around AML and crypto for many years now. But frankly, what's missing there, and this is taking a step back, is other countries have not progressed as quickly in the United States as having those regulations and enforcing those regulations. So I think some, illicit actors have been able to be headquartered on the internet and not been able to be properly supervised and regulated by authorities. That comes back to countries' adherence to FATF standards that we talked about earlier. It's incredibly important that countries, have the laws and regulations in place so that they're able to supervise companies. And that's not, again, unique to crypto. It's incredibly important that countries are regulating the banks in their country. That's traditional finance as well. So I think that's one gap. What the other kind of critical thing, and crypto is a newer industry, but we've seen this in traditional finance, is then with that information sharing is so critical between the private and public sector and vice versa around where the threats are. Once you have regulations and once everyone's, doing the AML CFT norms that they should be doing, then it's sharing information, it's working together, it's being partners with law enforcement around the illicit finance threats as you see them. We'll always have illicit actors trying to use any financial system. That's inevitable. Can we work to make their lives as difficult as possible, put as much friction in the wheels as we can? I think that's where, governments and private sector come at this issue. And I'm excited about some of the kind of emerging technologies and thoughts within the Web3 space that's looking at how do we even do compliance.
I love that answer so much. And it's interesting. I mean, my constant refrain with regulators and policymakers and even law enforcement is, look, like I think they're technology solutions to a lot of these issues that regulators are concerned about. We're building a lot of that today. There's a lot we're not building that I see, like really cool startups in the space, starting to build around digital ID and zero knowledge proofs and all kinds of stuff to build compliance into the protocol layer, right? Like there's so much cool stuff going on out there. And I do think that like a lot of these big concerns is we should be leveraging this technology. Look, this is maybe like as much a Caroline question as a Circle question, but like, are there certain risks that like keep you up at night? Are there certain, like, as a former national security prosecutor, yes, like I am focused on scams, like I listen to Aaron West, but there are certain issues like North Korea, like Russia, like terrorist financing that are the issues that like really keep me up at night and I'm really thinking about all the time, the sort of NatSec issues. How about you?
Largely the thing keeping me up at night are my two little kids who do a great job
Love this
of,
answer
of
so much.
keeping me up at night. And then consequently, I can sleep better when I am able to sleep. But certainly the scale at which we've seen, some illicit finance hacks, theft of tokens has been unlike what we've seen elsewhere. The speed in which attackers are able to move money and drain protocols of huge liquidity pools of tokens is certainly concerning, and even more so when the U.S. government tells us that that's going to North Koreans' weapons programs. Something I worked on for years at OFAC as well. I think the silver lining or perhaps the optimistic way of thinking about that is because cybersecurity has been such a challenging issue around crypto. There are a lot of brilliant people now working to correct those issues, where cybersecurity is also an issue in TradFi and beyond, right? Like cybersecurity is an issue everywhere, but we have a lot of brilliant technologists who are thinking about how do we improve cybersecurity in crypto.
I actually think like this is one of those really interesting issues where everyone is aligned. I've been in front of developers and different builders in the space. I was at a hacker house, I don't know, a couple months ago, and I said just this. It's like, guys, look, I care about national security issues because I was a national security prosecutor for most of my career. But even if you don't, we cannot allow illicit actors to steal funds at the speed of the internet because no one's going to put their money on your protocol, on your bridge, on these platforms if they think they're going to be gone. And then none of this works. So we really, really have to work together to stop that in particular. You mentioned being an optimist, which you so are. And one of the things I really love about you, it's like we're all in this risk and crime and bad guys world, but like you always look for the right answers. And I think the optimistic answer. So I am going to end not on risk, but on like promise. What is it, if you think like of one thing that you're like most proud of that Circle is enabling in the world today, like what is that thing?
I think it's the speed and access to a safe store of value with USDC and ERC. I think it's the conversations around both small and large with companies, with builders who are enabling, micropayments to some of their suppliers who are able to send money home, to able to partner with NGOs and deliver aid more efficiently and safely and transparently. And then, it's our partnerships with developers and those builders and letting them use USDC and building USDC and the chains that we're on and, some of our products so that they can go build even more innovative solutions with USDC as the base layer, and doing so in a way that's still, 100% committed to countering illicit finance, to AML/CFT norms, and spending internal resources to have our own tools on that as well.
I love it so much. What do you do when you're not building a safer financial system? You mentioned 2 kids. I'm sure that is a lot of your work, as it is mine. How do you spend your time when you're not ensuring the future of finance?
Yeah, great question. Yeah, I have 2 little kids, as you mentioned, so most of their hobbies are now my hobbies. So, that keeps me plenty busy. But in the off chance that I try to get out of town to a place with no cell phone service, and take a break and think about things besides illicit finance and crypto for a few days. Although it has a way of always being there.
I love it. I've told this story before, but since we're on TRM Talks, I'll tell it more publicly. One of my favorite stories of my 2 years at Treasury. In 2019, the Nationals won the World Series, which was like probably the coolest run in DC sports history post Commanders' successes in like the 70s and 80s. Caroline, not surprisingly, had the nicest office in all of TFI, which had a view of the White House, a direct view of the lawn. And the Nationals were celebrating their World Series victory at the White House. And so I went into Caroline's office and we were trying to get like this, amazing view. I think the only thing we could really, really make out were the racing presidents because they were like had huge heads or something.
Ari, you never explained to me why you had binoculars so that we could look on the South Lawn. But
Yes.
if this is your time to come clean about why you had binoculars in your office.
A lot of cool things happen outside your window. You needed a good look. But yeah, anyone who could picture the Treasury Department was kind of like on the side where the Hamilton statue is, but just enough to the side where you could see the White House. Caroline, thank you. Thank you for being in this with me. Thank you for being on TRM Talks. Just love this and love that we get to work together.
Likewise. Thanks, Ari.
It's so interesting. I was in Las Vegas for Money 2020 recently, and the entire conversation, certainly on the digital asset space, was on stablecoins and really how they're being adopted by fintechs to send payments at scale. Cash App was there. Obviously, Circle, PayPal has a stablecoin. Stripe recently acquired Bridge in order to really build a stablecoin infrastructure. And in order for this ecosystem to even grow further, we really need regulation and policy. And Caroline is like part of both of this, right? Part of the adoption piece at Circle, where they're partnering with Visa and other types of fintechs and cryptocurrency businesses and wallet providers and different apps to send USDC at scale in order to kind of build this really growing ecosystem. And on the flip side, we talked about policy, about legislation, stablecoin legislation that requires stablecoin issuers to do certain things, all of them which Circle does today, reserves, accounting standards, all of these types of really critical pieces. And they're both going to go hand in hand. And I think what we will see now over the next year or so is stablecoin legislation and continued growing adoption. But it was really, really cool to see the fruits of really Caroline's work over the last couple of years really start to play itself out in the real world with some really, really cool use cases for stablecoins. Next time on TRM Talks, I sit down with Albert Faulkner, Chief Risk and Compliance Officer at Two Oceans Trust and former Wyoming Banking Commissioner. If you love the show, leave a review wherever you're listening to it. And follow us on LinkedIn to get the latest news on crypto regulation, compliance, and investigations.
TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. This episode was produced in partnership with Voltage Productions. The music for this show was provided by Ecolix.
Now, let's get back to building.